I'm glad actually to welcome everyone to today's webinar of UCU Business School. My name is Mykola Maksymenko. I'm Deep Tech Entrepreneur and Director of the Master in Technology Management program at UCU, and where we grow actually the technical manager and future technical leaders. And today we have a special guest, SC Moatti. She's a product visionary and tech investor, and she built a lot of different interesting products which were used by millions at Facebook and Nokia. And now she also lectures about product management and investment at different universities such as Stanford or Columbia University. And she also is today a managing partner of Mighty Capital. So it's a different role. So from being a product manager, now she invests in the great products. And Mighty Capital is one of the major VC firm in Silicon Valley. And along with this role at Mighty Capital, SC also serves as a board chair for Products That Count, a nonprofit that inspires more than 500,000 product managers across the globe. So SC, welcome to our webinar at Lviv Business School. And I hope this will be a very inspiring conversation for all these people here. We are glad actually hosting you in this webinar. And maybe as a warmer, actually, I know that there will be a lot of startup founders and startup related people actually in this audience. A lot of our students actually are either founders of the companies or work at leading managing positions in the companies. So as a warm-up question, I will probably refer to your experience as a product manager. And there are a lot of different stories how you become a product manager. So you can actually have some internal feeling of how to build product. But at the same time, there are a lot of methodologies already built and developed, a lot of books about how to build the right products. So now you are being an investor. So you're actually investing in the right products and the right teams which build these products. So the question is like, what do you think is the role of product management in getting the great product out of those teams, and how you identify either the team is capable to build the product or they have the right tools to do that?
Yes. So that's a great question. There's a few ways to look at it. One is like, what is a great investment? And then the other one is, what is the product? And I use two completely different frameworks to do that. In fact, when I went from being a product manager to being an investor, I made the mistake to think that it's an easy transition for all product managers. The truth is, it's not. Like, it's the exception, not really the rule. Most product managers love to build products, and investors are looking for deals. It's a lot more like a sales skill than a product skill. What's also really different is when you're a product manager, or when you're building a business, an entrepreneur, your job is generally to say yes to your customers. We're going to deliver that new feature. We're going to do everything to be on time. And as an investor, your job is to know, because your job is to not take the risks that you're not supposed to take, right? And so there are really different mindsets. I will say what makes a great product, I think, is a combination of things. Number one, when you think about what makes a great product today, it's an extension of ourselves. Sometimes, now we're looking at AI, it may even be ourselves a little bit. So when you think what makes a great product, you have to think what makes a great person. A great product makes us a better person. And so I use a framework that leverages mind, body, spirit of great product. So we look at body, beautiful products. Like, we all want to do good. We all want to be, beautiful. We expect that our products will also be beautiful. It's not just pretty pictures. It's efficiency. There's a wow factor to it. And I can go into more detail if there's questions on this. Then, so that's body. Then spirit, we all want to have meaningful lives. So we expect that our products are also going to be meaningful, which means they're going to be personalized. And as we personalize them, we're also going to need to respect privacy. And so it's a balance between the two that needs to be respected. Again, I'm happy to dive into this more. And then the last rule for great products is the mind, right? We all are here because we are lifelong learners. We want to continue to evolve. And there's a way that products also have to continue to evolve and change as we use them.
Mm-hmm. A very interesting framework, actually. I haven't heard about this. It's like it's a bit less technical and it's more about intuitive, but it's really beautiful, actually. Nice.
It's more philosophical. Yes, I agree. In fact, when I did the research for my book, that's how I came up with this framework. I spoke with hundreds of product managers and product leaders at all the top, Silicon Valley companies, and that was really the common thread. Uh, to give you an example, as I was thinking about beauty, products are beautiful. I went back and how the best minds in history define beauty. And I found camps. I found the rational camp. So you have like Pythagoras, or who's the fact that you could string, you divide it in equal interval, and you play it. It's harmonic, right? It's beautiful music. You have the golden mean, right, which is the ratio for architecture. So there's a formula for beauty. In the 20th century, you have a mathematician called Birkhoff, that says beauty equals O over C, order over chaos. So it's bringing order out of chaos. That is the efficiency and making something beautiful. And then there's another camp that defines beauty, which is more, creative or artistic. Like, for example, Leo Tolstoy and Steve Jobs, they say beauty is in the eyes of the beholder. So the uh, creator, the entrepreneur, does not define what is beautiful or not. Instead, the customer, the user, gets to define it. Also wrote a manifesto on um, uh, what is beautiful and what is beauty, what is art. That was really inspiring. Anyways, when you apply that to technology and entrepreneurship, you can say like, okay, a great product needs to bring order out of chaos, right? It needs to be very efficient. I need to go as a customer from A to B really straightforward, so that it's efficient. And then at the same time, a great product needs to have a wow factor. Otherwise, we will not see beauty in the eyes of the beholder. And so my customers have to have like that, you can't describe it when somebody just is like, wow, like you can't describe it, but you have to get to it to build a great product.
Mm-hmm. That's great. And another question, like these are the qualities of like philosophical qualities of the great product. And do you think what do you think about the people who are building this product? So like when you choose the startup to invest, so there might be no product at that moment. So it might be pre-seed stage, for example. Like how you see the qualities, like which qualities you value actually in those founders to identify that they can actually, that they are capable of building those beautiful products.
Yes. So you're asking me three questions. You're asking me how to pick a founding team, which I can share. You asked me what makes a great product manager, which is very different. I can share that. And then, like, how do investors pick, teams? And so, which one do you want me to answer?
Let's start from the first, like the founding team, let's say.
Founding team. Yes. So, the framework that I look at for founding teams is based on about 1,000 interviews that I conducted like probably 10 years ago when I was an entrepreneur myself. Um, at the time, I was thinking of starting a business, which was my last business, like before Facebook, before working for Facebook for a while. And um, I did not have a co-founder at the time. And I did not want to go to people and ask, like, do you want to be my co-founder? Because it didn't feel comfortable. And so instead, I said, I'm going to create a network of founders who are looking for co-founders. And of course, I'm going to be one of them. When I invite people into this network, I'm going to be the first pick, right? Like I'm going to get to pick who I want. And so I interviewed thousands of people in Silicon Valley to get them to join my network, which was a lot easier than say, do you want to be my co-founder? I said, are you looking for a co-founder? You can be part of this network. The entry point. So my learning from that is three things. You want compatible communication style, which means that you know as a team there's going to be disagreements, and you want to make sure that after the disagreement there's a clear decision and a clear course of action, because otherwise that's going to kill your company. So compatible communication style. You want to have um, um, complementary skill sets, which means that you don't want to be like 5 engineers or 3 salespeople. You want to have people with different skill sets so that you can complement one another. And then the third one is you want to have a comfortable appetite for risk. And the reason I say that is if I start a company with you, Mykola, and we, like I want to just do it for 2, 3 years and then sell it, and you want to go public, you and I are going to be in very different places when it comes to making decisions for building the company, and that's not viable. So the appetite for risk is really important.
Mm-hmm. Yeah, that's actually good point. And what do you think, like you said about compatible skills and like good communication compatibility, but what do you think about like multicultural actually aspect of the teams? Like how much that helps also to like for the success?
I think multicultural contributes to diversity. It's like diversity of age, country, gender, religion, everything.
Excellent. Look, I just will make a
Skills.
short remark. Actually, I want to ask audience, like audience, if you feel that you have some good question to ask to in the particular moment in time, don't wait till to the last moment. We can actually we can refer to your question in the chat. So just write it in the chat. We will either immediately read it if it's in the right context, or we actually will come back to those questions actually in the end of the conversation. All right. Thank you, SC, for this very nice start talking about product management. And now I wanted to maybe shift a little bit to Ukrainian context. So I wonder, like, how much do you know about Ukrainian startups? Have actually Mighty Capital invested in any Ukrainian startups? And
Yeah, so I know a little bit about the Ukrainian ecosystem because I spoke at a conference in Dnipro maybe 5 years ago. Um, and there was a lot of entrepreneurs and a lot of really strong technical talent. And I came away thinking that what was missing at the time was uh, product talent, which is the ability to take a technology and turn it into a business. Um, so that's my recollection from a few years ago. And as far as ID capital, we only invest in the US at the moment.
mhm, I see. And but from your observations from a side, I wonder, like, what do you see the strong features of Ukrainian startups, and maybe even in the current context? Like a lot of people speak about resilience, but again, like what do you think could be kind of features which startups could actually capitalize on when they talk to VCs, when they talk to customers, and that they can actually uh, showcase that they are from Ukraine and they have some specific features. Maybe you see those features which we don't see.
Like I said, I think the technical skills are excellent. I think some of the design sensitivities are also strong. What I see is often a gap when I hear founders from Ukraine, but it's a generalization. It's not always like that. Is generally not a strong sense for product, which means go to market, positioning, selling. So the technical chops are there. The business chops, I think, are on the rise. If you're referring to the situation right now with the war, of course, that makes you resilient, which is a massive competitive advantage compared to, when I think about like the younger entrepreneurs out in Silicon Valley right now, like the Gen Z and, very different approach. So that's a competitive advantage.
Okay. And what do you think? Like you actually noticed this. This is actually the challenging part, which we try also to fix in the Lviv Business School, like particularly providing more of the actually business side of skills to those entrepreneurs, like particularly speaking about marketing, go-to-market strategy building, also sales skills. That's something that we also try to focus a lot in our business school. And on the other hand, what would you recommend as a, like, assume that we have a startup in Ukraine and there are a number of startups even here in this audience. What you would recommend as a good storyline maybe to start when the startup actually comes from Ukraine? Because sometimes we feel right now that there are huge risks, of course, and for investors, risks are important. So what do you think would be positioning of the startups which would actually allow to overcome those risks?
Um, that's a good question. So I would say it depends on which market you're trying to get into. For example, if you're trying to build for the local markets, and you can have sales skills that will reflect your market. If you're trying to build a global organization, you're going to want to have an international rollout plan. So, country managers and all of that.
Mhm.
So I think that's really important. And thinking about that upfront and thinking about, your go-to-market strategy, your pricing model, the revenue, how you break even, how you generate cash flow, profit. Often I see, hey, the next step is we're going to build more products. But that's actually not building products. That's we're going to write more code, which is the sometimes and often the opposite of building products. In products, most of the time, less is more. And when you say we got to build this new feature, it's actually not a product; it's just code.
Mhm. I see.
So that would be one thing. The other thing that I would say is, when I think about risks, um, right now a lot of what I think about is AI, and I know it's a buzzword. I know everybody talks about it, but to give you a sense, with products that count, the organization of 500,000 product managers, um, every year we take nominations for great products, and the nominations we've received so far. this year, there's 6,000 companies. Out of the 6,000 companies, 4,000, two-thirds, are AI companies. So 67%. And last year, it was only 20%. And last year was already big, right? Because ChatGPT was already booming. And so that's to give you a sense, right? It was like 2 years ago, almost zero. Last year, 20%. This year, 67%. And so what I'm seeing is we are now in a very interesting place when it comes to AI, because a lot of people are building for what I call the first, um, the wave of cost reduction. And what I mean by that is I'm going to use AI to optimize like a call center. So I'm going to get rid of some low skill people because I can answer the phone with an AI, right? Cost optimization. I think that's part of the AI wave. It's like really hard to break in. Like we've made investment in this segment several years ago. So it's a little bit too late now. But I'm starting to see are companies that are attacking not cost, but productivity as their KPI. And so what they're saying is, I'm going to take Netflix as an example. Netflix is a content company. And so it uses a huge amount of resources to create content, right? Like producers and blah, blah, blah. And for Netflix to adopt AI would be changing like their entire operations. It would be like gutting the company and restarting it. So Netflix is not going to do that. But a new company can do that, right? With probably 10 times less people and a lot more computing power, a lot of smart ways to use AI. So it's attacking the productivity of the core business. Netflix is not productive. The new business will be 10 times more productive. And I think that's just beginning. We're starting to see companies of like one or two people when, a year ago at the stage that we invest at Series A, it was like 15, 20 people. And then the third wave, which we're not even scratching the surface yet, is going to be like the disruptive business model. So, for example, if you say, I'm going to disrupt Netflix, like I can't tell you how it's going to be done because we haven't even thought about it yet. But it could be something like, I'm just making that up, right? You were watching movies, now you're interacting with the movie in a way that's like personalized, right? It's not just like a 3D movie, it's like a metaverse type thing with AI. And so it's going to be a completely different business model from Netflix that's going to generate like new kinds of revenue, new kinds of business models. And that I think is still a few years out.
Mm-hmm.
Anyway, so to your question about what are the risks, I would say because in the Ukraine there is so much very strong technical talent, it's going to be really important for the startups that are based in Ukraine to embrace AI for anybody else. Because if you're late to the party, then it's going to be much more of a defensive position where you're going to say, well, no, but we have developers that can do it, faster, cheaper because they're smarter. But if they use AI, they can actually do it like 10 times better, 10 times faster. And so I think that's an opportunity.
Mm-hmm. Yeah, that's a good point, actually. And particularly in the current situation, also, like the productivity grows in many aspects, like of software development as well. Like using AI tools is quite important trend, I would say, currently in the engineering community, like using Copilot, for example, or using ChatGPT for generating some, for example, tests for code, which can really streamline the software development processes. Yeah, it's exciting. Good. I still encourage everyone actually to ask questions in the chat, and we go to the next part of our conversation today. So we know that you are advocate for women entrepreneurship, and we wanted actually to also share this trend in Ukraine. In particularly recent years, actually, there is a growing number of female entrepreneurs, and given the current situation, of course, like it's generally hard to be entrepreneur in Ukraine. So because of the risks, because of the political situation, but anyway, people actually are kind of using this as an opportunity to build new businesses, and they actually succeed. So what would you recommend for female entrepreneurs actually to maybe embrace in the current situation? What would you think could be a strong point, and also in the global context, maybe they can use some of the new networks that emerge in the global context.
Yeah. I'm trying to think what would be different for women entrepreneur versus for men. What we think about when we invest is we have an inclusion policy, diversity and inclusion, and what it says is actions speak louder than words. And so what I'm seeing is the more we talk about how women entrepreneurs are different, or Ukrainian entrepreneurs are different, or the the more it becomes true. And what I think really makes a difference is to go and do it. And the resilience that you're describing is what's going to keep you going. And so my experience, having spent um, some time in Ukraine, and having met entrepreneurs from the Ukraine, including women entrepreneurs, um, they don't they don't carry the fact that they are women as a badge of like, oh, therefore we need a different treatment. It's actually the opposite, and I like that.
Excellent. Yeah, thank you. And generally, so you also noticed about the AI as an AI not for productivity, but more not for optimization, but more for productivity, as one of the like interesting trends which you see right now. So, what other trends can you spot? So, what else I wanted to say is like from the AI perspectives, and that number that you mentioned, like 60% of the of the products were actually AI based. It's also the question like, is it a good trend or bad trend? Is it like following the hype, or it's just the world we are living in?
Yes. Well, I would say most of these companies, they're in that, cost bucket, right? So optimization. So they're going to take a GPT and put some content beneath and try to build some use cases. And so it's more of a technical project, a learning project than anything else. I think it's very hard to scale that into a business right now. If I wanted to build an AI business right now, I would look at opportunities to disrupt Netflix and other companies. I'm not saying Netflix, but to disrupt companies with AI first operations, right? To disrupt the productivity side of the operations.
Mhm. And in case of AI products, if you're already talking about AI, what do you think? What do you think actually is a distinguished kind of feature of a new AI startup? For example, there might be a startup, as you just said, like which try to capitalize on ChatGPT API and then build some service around that. And probably that's not the best idea because that's kind of not a good competitive technology. But do you have some kind of framework which allows you to see AI startups which actually have a potential to become like the next unicorn?
Yes. So if you're asking what do I think are great AI products, I use the same framework, mind, body, spirit framework. Where I think we are there with AI is when you about the mind of an AI product, we've been there for a while. Like IBM Watson was the first big AI product, and it was designed to solve search that are more complex than the others. So it's like it makes you smarter. It gets smarter as it gets used. It kind of aligns. Then what GPT accomplishes is fits the aspect of design, like beauty. Right? It's really easy to use. It's everybody spends hours on it, and it's tempting, and it's seducing, and it's efficient, and so it fits that bucket. But when you see like what are the limitations of ChatGPT and complain about, it's like all the hallucinations, and it's kind of answering some weird things that don't really make sense to you in general, and so it's not really meaningful. It's just a machine, right? And so that's kind of where I think AI is right now in terms of the life cycle of product. It has the mind, has had it for a while, it has the beauty, and that's the most recent chat GPT wave, but it's still missing the spirit. And then in terms of making investments in AI, we've been making investments for many years. In fact, half of our second fund, which we just finished deploying, so we have probably like 7, 8 investments are in AI, but we haven't invested in AI for 2 years. We invested like before ChatGPT became big, because now everything is a hype. When is the investor hype going to end? Um, it's probably going to take a little while. Not sure it's going to be like before summer. So that means that entrepreneurs who are starting businesses now may still be able to get some pre-seed funding. I don't necessarily recommend it because getting funding at these super high valuations, it actually hurts founders more than it hurts investors.
And can you elaborate actually on that? That's actually a very interesting point.
Yes.
And I think right now it's also like on one hand we have hype, on the other hand the economic situation in the world is also like getting more complex, and there are additional risks for investors. So can you elaborate this point about the high valuations, and then like about the current investment climate, actually, how does it work today? Like, because it seems like valuations actually start to drop.
Yes. So let's say you're building a software company. Most publicly traded software companies are valued around 10 times the revenue. There's a lot of exceptions, but let's just pretend that we're going to go with that for a second in the particular segment. So what it means is like if you're starting a company, in the best case scenario, where the most successful companies, they are trading at 10 times the revenue. But most companies are not public and they are not as successful as the public companies. So they're trading like below 10 times the revenue. Now, if you build an AI company right now, you can probably get 20 times the revenue. And so you're building a company on this trajectory, but you know that the best companies are on this trajectory. So at some point, your 20 times is going to have to like come back to 10 times. And that downturn, that correction, means that the value of the company gets crushed. It doesn't get crushed equally. The value of the investor share is pretty much the same. So the part that gets crushed is the value of the share of the entrepreneur. And so when you ask for a valuation that's too high early on, investors may tell you that because it's maybe initially easier for them to not tell you the truth. But then when you get the correction, they don't get hurt. You do as an entrepreneur. So you don't generally want to get too high a valuation.
That's actually a very good comment. Thank you very much for this. I think a lot of people in this audience they have good insights. Again, I encourage people to actually ask some questions. I see a question from Max. Max is asking about the AI for productivity and the discussion about productivity. I think that was the right moment. And isn't that the same product? We can use AI for coding, for marketing, for business analysis, and all in the same company, right, Max? Do I understand correctly?
Thanks for that. I can actually elaborate a bit. It was the comment even to the previous topic where we were talking about strengths of Ukrainian startups, and we mentioned tech expertise. And then one of the concern is that now with the development of AI, it becomes easier to code, right? The AI is generating the code, so it might not be that easy to keep that our competitive advantage. So my comment here is that isn't that the same for the product skills, right? AI also can help us with product decisions, with marketing decisions, if you feed it with the right data. So it brings us that value of being able to make better choices, having now both technical expertise, but also get that product suggestions, let's say, from AI too. So it's kind of, it looks really similar to me. What would you say?
Yes, you say, hey, what we lose here, we might gain there. You're right.
Exactly.
Yes, you're right. But when people think about like, hey, I have a startup or I have a big company and I want to hire engineers, they're going to think naturally about Ukraine has great technical talent, so I'm going to go find them there. I don't think they would naturally think I need marketers, I'm going to go find them in the Ukraine. And so in terms of like Mykola was talking about the global landscape, if the talent in the Ukraine doesn't embrace AI and that person who's looking for technical talent doesn't say, oh, I'm going to find now great AI talent in the Ukraine, then they're going to go somewhere else.
Got it.
That's a good point. Again, another reminder, once again, people feel free to ask your questions. Don't be shy. Good. And maybe we can shift also to the current investment trends. So in the global context, actually, currently, we see that generally valuations go down. Also, we see that it's getting a bit harder sometimes to get investments for early stage startups. It also depends on the domain and specific case. But generally, can you comment on what's current situation from your perspective as being a leader of one of the VC funds?
So you're asking about the funding environment.
Yes, exactly.
Yes. I think it's a tough funding environment right now. And it's really very much the trickle down effect, which means that what happened is governments and pension funds, endowments, foundations, so the big money basically, um, because the stock market collapsed, they have seen the public side of their assets go down. And the way they manage their money is they say, I'm going to invest, let's say 50-50 in public markets and in private markets. And so when the public market shrinks, the private market are much slower to change. So they're going to stay the same. So now all of a sudden they're artificially out of balance. And so they're waiting for the stock market to grow bigger and maybe the private market to contract so that they can rebalance. But that's usually like delayed, it's not instant, it's not very efficient. So that's why right now there's not a lot of capital that goes into private markets because of the contraction of public markets. In addition to that, once those investors, right, get their money back here from the public market, they don't necessarily put it back in the private market because what has changed is interest rates. So now when you put your money in bonds, you can get some really good returns because interest rates are really high, or you got nothing. So you wanted to do something else. Now you're getting some good returns and it's very low risk. And so the question is basically, why would I invest in venture capital? Because it's high risk and it's also illiquid. The money is going to be stuck for a while. And so it's much harder for them to say, I do want to invest in venture capital because there are alternatives. And so that trickles down to entrepreneurs.
And what would be your advice for entrepreneurs in this case? So is it like the situation, like kind of, shall we act as a crisis management situation where we just like try to reduce our burn, try to live as long as possible? So do you foresee the situation to change in the next few years?
So I agree with what you're saying, which is advice for entrepreneurs: watch every dollar, be very capital efficient, make sure you can last for as long as possible. You're asking like, oh, when the good days come back, do I need to change that? I would say no, because you're still going to build a better company if you keep that mindset even in the good days. It's just that this time you have to do it. And so some people are good at it and some people are not so good at it. And that's what's going to make a difference for when the recovery happens. All the people who aren't very good at managing businesses are going to be gone because they're going to be going out of business.
Yeah. Excellent. So I would probably make a short break and ask audience again, like to ask questions. Are there any comments or questions? Feel free to write in the chat or raise your hand if you want to actually speak loud. Okay, Max.
Yeah.
Max is actually a founder of a really nice new Ukrainian startup, so and that's why he has a lot of questions.
Great.
Yeah, thanks. So I think you mentioned that your fund, you did not invest outside of the US, right? So you're only fund US-based companies. So the question I have is, what do you feel like is the real atmosphere within other investors, let's say, when thinking about funding Ukrainian startups, even if they are registered in the US, they're Delaware corporations, etc., but the operations are in Ukraine? Do you see that it's typically a hard no or like big risk, or there are people actually considering that, specifically in the US? Your honest opinion, let's say.
Yes. My honest opinion is that you already know the answer to that. It is a hard no for most investors. It's, the mindset of investors is actually very simple. They want one thing and they don't want another. What they want is they want to make money. And a lot of people will tell you, oh, they want to see multiple founders, they want to see a great roadmap, they want to see. No, all I care about is, if I give you $1, will you give me $10? That's really the very simple thing they want, and nothing else. And then the thing they don't want is they don't want any risk. So they want 10x with no risk. So if you come to them and you say, well, I have a company that's actually abroad, oops, that's a risk. And not because it's bad, it's just they don't understand it. They haven't managed it. So they're saying, well, you know what? It's just a risk they don't want to be taking. And so if you give an investor one reason to say no, they have to say no. That's their job. It's not like they don't like what you're building, or it's just their job is not take risk.
And maybe the good strategy would be to actually communicate the high return here in this case. And what do you
Exactly.
think?
High return, low risk.
And contrary, I think the companies can still find a way to de-risk the startup. So you can have, for example, your team majorly in Ukraine, but you also can think about like diversifying your team partly in other locations, perhaps, to showcase that you can actually make quick go around if something goes in the wrong scenario.
Yeah. So for example, some entrepreneurs will say, well, when I get the money, I will move. And so the risk there is, why would I be committed and you aren't? That's why they're thinking this way. Like, well, if you're not committed to moving, it means you're not committed. So why would I be? Why would I give you money? So you want to be moving first, taking the risk yourself first, before an investor will take the same risk to support you. Does that help, this mindset of like managing the risk?
Thank you. Oh, there is a new question. Now Victor asks, can you share some of the examples of product startups which are not problem-centric or built around the exact problems and still sound interesting for you?
Problem-centric.
Yeah. Victor, maybe you can actually speak loud and explain this question, because I'm a bit confused.
Yeah, hello. Sorry, I cannot use camera, but like the idea, so like we are trying using some business canvas, we are trying to solve some problem, yes. And like but it looks like that it's not easy to find always. It maybe there is like way around, like when you are not like really dealing with the problem, but trying to build some solution, probably unknown needs or like hidden needs. And maybe you can share some examples of such products like from your experience.
Hidden needs. That seems like a big risk. Why is it hidden? It's like, especially in the current environment where it's a difficult economic environment. People don't have extra money. And so when you tell me hidden needs, I've put my investor hat on. I think of two risks. One is, if it's hidden, it's not really a must-have. It's more of a nice to have. And so it's not going to be successful in this environment. And two is, if it's hidden, maybe it's not a need at all. You think maybe it's a need because you want to build this product, but if nobody wants it, then it's not a business. It's just code. So that's how I would think about it with my investor hat.
Yes, thank you.
And maybe, Victor, you can immediately say about the second question. So you asked about products or startups which build
maybe I can
around from the technology perspective rather than
the idea, so like you go not like from the top to the down, like based on the like problem, and again like searching for the like technology or solution, but like way around. So you have like a solution and you are trying to find like the problem which can be solved with the solution. Like what's your opinion about like how much it's a good idea, or like how much it's generally works fine or not?
Yeah, I think it's the same answer. It's if you're building something, there's a need, right? Or there's maybe no need at all for it, then it's not a product, it's just code, and it's not a business, it's a hobby. A business has customers, customers have needs that they express. They may not express it well, but your job is to understand what they're expressing, as opposed to build something and see if you're going to be selling.
Yeah, makes sense. Thank you. Thank you very much.
All right. Any more questions from the audience?
Everybody is quiet. I know it's a little bit late.
Yeah, we talked about a lot of things, actually. It's quite exciting. And I actually wanted also to ask, get back to the very first question. So you said about this very interesting philosophical approach about building products like mind, body, and spirit. So what do you think? So this is actually very interesting, indeed very interesting approach to like look at the products and see if they are actually powerful enough to win the market. And on the other hand, there are a lot of different methodologies, like from like 10 types of innovation, from doubling to standard like product life cycles. So what do you think, like how much it's actually important for the newborn founder to be a guru of all those methodologies? So how did you start it as being a product manager? Did you actually start with this kind of more methodological approach, or you actually started more as building products from your own personal with your own personal feeling of what the best product would be looking like?
Yeah. So when you're thinking like a great product manager, it's evolved a lot. And so let me give you an example of how we handle that with products that count. What we say is the skill set to be a great product manager is like constantly evolving. Like today, you have to understand how to build AI products. But a few years ago, it wasn't really a big priority. And a few years ago, we didn't have like growth hacking and so on and so forth. So the skill set is constantly evolving. In addition to that, the kind of product that you work on is going to require vastly different skill sets. So you may be working on like Snapchat, and then you're going to need to be great at engaging your users and performance and usability. And then you may be working on some like Salesforce.com backend platform. And so you're going to need to be able to have great documentation and reliability and whatever. And so the skill set is completely different over time and completely different over different products. So that doesn't make the work of product managers very easy, because then they have to think at this time for this product, based on my current skill set, what are the gaps? Right? So it's actually really a tough question, right? Same with entrepreneurs at the beginning, based on what I'm building and so on, what are the gaps? So to give you an example, with the nonprofit that I chair, Products That Count, for the past 7 years, we've been celebrating great product and great product managers, and we form an advisory board. And every year we ask them, what are the top superpowers of product managers? Every year, something different. Like it's a different set of superpowers. So you can find out about that on our website, productsthatcount.com. And then, so that's the first thing. It's like you have to be really self-aware. And then the second thing is, in the past few years, the number of products that support product managers has increased by 10 times. I mentioned to you we received 6,000 nominations this year for the 7th year But 5 years ago, it was 10 times less. It was 600. And so that means that the number of tools that are supporting managers are many more tools for all the different superpowers and skills. And so part of your competitive advantage, in addition to being self-aware and knowing the gaps and reevaluating the gaps as innovation keeps going, right, is understand, okay, now that I know what I have that are strengths and what I have that are gaps, what are the tools that I need to use that are going to make my strengths even stronger and bridge my gaps, right? Am I going to use like a road mapping tool? Am I going to use a time management tool? Am I going to use there's like 6 steps to choose from. And so our advisory board will actually pick every year, right, and give awards to the 200. This year we're going to have 200 winners. But it's still 200 tools. I mean, it's a lot of tools that product managers need to review and pick and learn. So number one is like the self-awareness to know your strengths, your gap. Number two is keeping up with all the tools so that you stay current, you stay competitive, because if you don't learn these tools, your competitors, like other product managers, are going to learn and you're going to be behind. And then the third thing is like staying sharp on product, like constantly like participating, like, so our community, that's why it exists, right? Like attending webinars, listening to podcasts, so that you know what's going on, what are the best practices, and you stay sharp. It's a difficult job because your job is to bring innovation inside a corporation. So you have to understand what changes all the time, and then you have to see how it actually scales effectively in a large organization.
Yeah, and we have another question from the audience, and that's a very good question. I think it's like it probably could be one of the final questions today. What was the strangest product you ever created? Which
The
probably was
strangest product
the strangest, most strange products that you ever created.
that I created. Well, a long time ago, 15 years ago, 15 years ago, I worked on an augmented reality product. So it was part of the previous era of augmented reality. And so at the time, people still had Nokia phones. And it's my iPhone now. And this product was augmented reality. And so you would basically take your phone like this, and with your camera, you would see like information about like landmarks or people. And at the time, everybody was saying like, oh, this product is never going to work because nobody likes to hold their phone like this, right? And now, of course, everybody takes selfies, and but the behavioral change is really hard to predict. And so that was an exciting product. It still is very cutting edge from a technology perspective, even 15 years later. And obviously the behaviors have completely changed. So now, augmented reality has a shot at becoming mainstream with Facebook and Mark Zuckerberg. So yeah, it's interesting times.
Yeah, that's a great example. Yeah, I think this human-computer interaction component is something that actually people undervalue a lot. And I think you mentioned case of ChatGPT. That's particularly also another case of human-computer interaction, how it actually helped to change the dynamics of the whole technology, because GPT technology was there already for 4 or almost 5 years. But this way of packing it into a nicely and very seamless interaction, it actually changed everything.
Yes.
Excellent. Yeah. I'm asking the last call for the last question. The AI products you found typically own their proprietary tech or use out-of-the-box solutions like OpenAI APIs.
So we have invested in companies that have proprietary data sets. So, for example, one of them has a lot of medical imaging data, and so they are basically licensing their data to a number of companies like Microsoft and other like big firms. So that's one type of solutions, and then we do have a few solutions that by now have reached some scale, so they generate a lot of revenue, and they're using what they've learned over the years from working with their customers. So it's not necessarily proprietary data sets that they acquire, but it's a proprietary data set that compounds as you use the product.
Mm-hmm. Yeah, so it's if you use some others API or technology which is more commodity, then it's important to have additional aspects which kind of create the system around this technology, which could be unique and give you a competitive advantage over the others. Excellent.
Exactly.
Yeah, that's a great recipe at the end of this talk. Thank you very much, C, for attending this webinar tonight. It's tonight on this side of the world, morning on your side. And this was very interesting discussion for everyone, I think. And we had a number of questions from the audience. And it was great actually to learn that you also visited Ukraine some time ago. And we will be glad actually to, like, next time you will be in Europe, and there will be a chance to invite you to Lviv Business School of UCU. That would be great to see you here. It's a lovely environment. You will enjoy it a lot. So if you happen to be in Europe, we will be happy to have you actually on the campus. And yeah, with this,
Thanks so much for having me.
Yeah, thank you for joining us today. And yeah, with this, I'm probably will wrap up today's conversation. Thank you everyone for attending. Thank you for a set of interesting questions, and hope to see you on the next webinars. Bye, everyone.
Thanks for joining so late. Bye.
Bye, see. Have a great day.